Hey everybody, welcome to the Meet the Manager series. This is one of our most popular series, and I'm really excited to do this today with Holly and John, two top alumni from VC Lab that are specializing in AI. Obviously, it's a very hot topic, and we're super excited to have this session. If this is your first session with us, I'm Mike Suprovici. I'm the head of acceleration here at Desal Group. Desal Group is a company that's specializing in basically reducing like the barriers of entry into the asset class for emerging managers. We do this in a variety of different ways. We have an accelerator called VC Lab, which has become pretty much one of the default ways that people start firms. We have a product called Desal Hub, which sort of integrates the entire operations of VC. We have a back office offering called Desal Partners, and we also have a fund of funds. And what we like to do is we want to try to sort of give you as much information as possible if you're in the audience to sort of like learn about this asset class, to make this asset class more transparent, and to really be able to sort of kind of answer any sort of questions that you have on a variety of different topics. So if this is your first time joining us on a webinar like this, we'd like to make these really interactive. There's a chat on your right-hand side. You can say hello, you can say your name, you can put a LinkedIn or whatever. Just don't like talk about your fund if you're like an emerging manager or something that's on this call. That's potentially general solicitation, so just don't do that, but just say hi and things like that. In addition, there's a Q&A button at the bottom of your screen. And you can use that to sort of ask the panel questions, and I'm more than happy to go ahead and sort of ask your questions to the panel. And again, we want to make this as interactive as possible, so that's the whole point of these types of conversations, okay? One more quick thing before I introduce the panel here and we get this discussion going. Let me just read a quick disclaimer, which is sort of normal with these types of webinars, is that this content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. All right, so without further ado, let's go ahead and get started with the panel. Holly, maybe we can get started with you. Can you please quickly introduce yourself to the audience?
Yeah, thanks, Mike, and I appreciate you guys having me. I'm Holly Neiweem. I'm the founder and managing partner of Apprentis Ventures. I've been on a few sides of the table throughout my career, from operating in foundational industries at GE's industrial systems and sensing businesses, kind of investing across the capital life cycle from day one to distressed, up through an institutional level. And then I've served on a few global boards before I started Apprentis Ventures. I was most recently the chief operating and financial officer for a cybersecurity company in the encryption space, and that was up through its Series A. So I've kind of been on all sides of the table. I'm super excited to be here today and take some questions.
Awesome. John?
Hello, everyone. My name is John Whaley. I've started 3 companies in the past, all in the area of cybersecurity, and I'm very new to the area of venture capital. I've always been on the other side of the table. I've raised around 120 million from venture capitalists as part of my last ventures. It's been a fun ride so far. That's for sure. I did my undergrad and master's at MIT. I did my PhD at Stanford. I teach at Stanford as well in the computer science department, in large language models, in fact. So, and the class that I taught last quarter, I think, filled up faster than any other class that I've seen at Stanford. Within around 3 minutes, it was full, and the topic area was about building applications using large language models. So it is certainly very hot right now. And so it's really exciting to be working in this space here in the Bay Area, while the whole revolution is happening. So great to meet everyone. I'm looking forward to the session.
Yeah, and speaking of it, which you just talked about how exciting things are and stuff like that. Like, what sort of inspired you at this juncture, right, to sort of start or launch a VC firm, John?
Yeah, I mean, so the background here is that my last company got acquired around 3 years ago, and I was looking for my next thing to do, and I was not making a ton of progress because it was me in my bedroom, just not I had too many distractions, no deadlines, and then my co-founder and I, we knew like we wanted to start something new, and but we're kind of stuck. We're just sitting there spinning our wheels, and meanwhile, all these amazing things are starting to happen. This was in 2022. All these amazing things were starting to happen, in large language models, and so eventually we got we got sick of not making progress. We decided like we knew what we needed, which was to go away somewhere, remove all our distractions, and really be able to focus, and also be surrounded by kind of other really smart, creative people like potential co-founders. And then most importantly is we needed a deadline, which is a very important part, especially for me. I'm very deadline driven. I've always been that way. And yeah, and so we rented this house in Lodi. You guys probably don't even know where Lodi is. It's about 2.5 hour drive away from the Bay Area. It's like they have great wines in Lodi. It's like a wine country, but nothing else to do out there. We rented this house, invited about 18 people that we knew to this house, and then ended up just forming a kind of accelerator program there. It turned into something that was that became pretty big, and so that became Inception Studio. So I think that and we had a really unique model there about like how we try to get people together. We're a nonprofit. We don't take any equity, things like that. So that was it was kind of born out of my own frustration, and Mike Morris, my co-founder there, our frustration in terms of being later in our career, but like wanting to start companies, and like other type of programs not really being applicable for we're not going to go and join Y Combinator or these type of programs, but like we did need some help there in terms of meeting co-founders and like with ideation and just that impetus to like actually get started. So yeah, that's how we found our way into this space. And yeah, it's been a great ride since. We've done 10 of these cohorts so far, and have a lot of really great success stories there. We'll have a big event tomorrow, a super demo day as well, where we're highlighting a lot of the companies from a lot of these founders from multiple cohorts there. So it's this was a kind of an accidental thing that we just did, just out of our own our own frustration about like how starting companies in this space.
How about you, Holly? Like what inspired you to launch a VC firm?
Yeah, no, John, that's great. I don't think I'd heard that story before. That's super amazing. I think for me, it's a few reasons really. I don't think there's ever really been a better time to be a venture investor than right now. We're in this kind of super cycle in terms of value creation thanks to AI. And I think a lot of the like bad behavior that we've seen from 2020 and 2021 kind of has shaken out a bit. Secondly, I kind of only wanted to do this when I felt like I had the right expertise from all sides of the table. So investing board and operating at a startup, like I didn't want to be an early stage investor who had never really built at a startup. But I think for me personally, it's really around kind of democratizing access to capital and kind of opportunity and venture. It's tended to operate with this black box apprenticeship model. And so, throughout my career, I've often been one of the few or only women in the room, and I've kind of seen firsthand how that impacts investment decisions and resource allocation. So I've always wanted to build a firm that kind of, could utilize the expertise and networks I've built over the past few decades, and really be able to capitalize on that mismatch that I've seen between, capital and opportunity. So that's why I'm pretty excited to be here with Apprentis Ventures.
Awesome. And obviously the topic of the day is like AI. Obviously, John, you mentioned some really interesting things that you're particularly excited about. I mean, Holly, is there like any particular trends or things that you're particularly like excited about, especially with relates to AI, but you can take this however you want to take it.
Yeah, I mean, I think for me, I'm most excited at the application level, and that's maybe that's because I don't have billions to invest in foundational models and infrastructure. But I'm really interested at the intersection of AI software and cyber, and then also at the intersection of AI software and legacy industries. Like from a 30,000-foot view, there's a 10 to 15 trillion dollar AI opportunity. Okay, that's great, but what's way less talked about is that in the US, we spend $1 trillion on CapEx each year, and most of that's maintenance. and you're like supporting and protecting these legacy infrastructures. It's super capital intensive. There's legacy software. It's not super sexy, but it's totally ripe for disruption. So kind of using AI to augment those like legacy workflows and software to free up some of that, maintenance line, think about what that could do for, reinvestment and growth. So those are the types of areas that I look at and get most excited about.
Yeah, and there's a lot of those legacy industries, they're almost forced to adopt some of this stuff, right? Holly? Like they don't
Yeah.
have a choice. We're sort of at that really interesting inflection point in time, right?
Yeah.
How about you, John? Is there any trends that you're particularly excited about with regards to AI in particular?
Yeah, I mean, and I think that, just kind of being here, I've been here in the Bay Area since 2000s basically, and just being at Stanford as well, like get kind of get a really unique view of this. I mean, one thing I do want to acknowledge is that we are in a bubble right now. There's a lot of excitement around this, right now, and some of it is justified, but some of it is, over exuberance, I would say, and there will be a correction at some point, but to me the important thing around kind of like when you are in a bubble is like to really focus on like the quality, the quality companies that are solving real problems now, and I think there are lots of examples of that. So like, yes, we are in a bubble. Yes, 95% of the companies that are starting right now are like, they're going to get either acqui-hired or not exist, within 3-4 years. On the other hand, I think that there are some that are like there's many $100 billion companies that are being formed and started right now. Probably at least $1 trillion company that's formed and starting right now in these spaces. And so, like Holly mentioned, I mean, there's a kind of big boys game, I guess, that are just, it's like these, this requires you start by raising $1 billion, and then you raise 10 billion after that, because it's all about access to data, access to GPUs, and whoever can outspend anyone else is going to end up, doing better in that game. There are obviously companies that are playing that game, but there are tons of opportunities that are not that. It's absolutely, AI is going to disrupt a lot of industries and a lot of roles. Like the organizations that fully embrace it will be the ones that kind of go the way of Netflix, and the others are going to go the way of Blockbuster. Like we're at that type of inflection point, and there's going to be some new players that are going to come up, using generative AI for marketing, or for in legal, or in any type of document review, or even in areas of finance and others. I mean, even there's a stat that it's well established at this point, but like that for software developers, like a software developer who uses some of the modern AI tools are 5 times as productive as ones who don't. And so, I mean, just like, I mean, like that's a 500%, like difference in productivity there. And yeah, and then like, and it's only the gap is only going to widen as we go forward. So these, I mean, during these times of like these interesting times of disruption, these open opportunities. And so I think there's a lot of great opportunities for new players to come along to kind of to do things in a fundamentally different way, like these new they call them AI native companies that are just kind of, they're starting up now, that are that really exciting and have a great opportunity to be disruptors in the space.
Man, it must be just so challenging, John, based on everything you said, just to like do diligence, right? You just mentioned that like a whole bunch of these companies are going to become like acqui-hire or whatever. Like it's just, and picking which one's going to be the trillion one, obviously lots of alpha, but how are you managing, man? Like, how is this even like, it's like, it's so in a hype bubble, all this stuff. How do you pick, like, how are you dealing with all this right now as an investor?
I mean, my approach is very much, I mean, there's a set of fundamentals that don't really change here, about who is your customer, like what is a burning need problem that you're solving for them. Like, I mean, none of these things change with AI, right? And like and if you don't have those fundamentals right, then, and then you're unlikely to build a real sustaining, strong business there. And so this is where we start about, okay, well, like what, what real problem are you solving, right? Like, who are your customers? How are you reaching your customers, right? What kind of traction do you see today? And, I do think there's a lot of opportunities around AI. That being said, companies that are just treating AI as this like magic hammer and going looking for nails is like, that's often not quite the right approach, that we've seen. I think there is a lot of opportunity in the kind of picks and shovels business of like, hey, we're building tools for AI, because like there's gonna be a lot of spend in AI machine learning going forward. That being said, I mean, there's a lot of companies in that space as well. So, there will be some winners there, but you have to be like quite careful, like when you're trying to make investments in that space, just because, there's this is a natural place that if you are familiar with machine learning, AI and machine learning, is like, well, I know my own problems, so I will build tools like to solve these type of problems. Where, I mean, obviously there's going to be some really strong, like powerful companies there, but there's also many other founders who are trying to do very much the same thing. I mean, and then like, to me, like at the end of the day, it just really comes down to the founders, especially at the beginning. I taught this class at Stanford. We have a bunch of Stanford students in there, and and it was a project-based course. They came up with ideas, and it was amazing how many of those ideas, like these like student groups came up with. And their approach was exactly what I've seen companies that have gone on, in fact, like raised tens of millions of dollars on exactly the same idea that these students had come up with, right? And because and so I mean, what that points to me is like, that ideas are cheap, and it's all about execution, and it's all around like the founders and the founding team. It says like, what's gonna be the different, if a group of undergrad students at Stanford can come up with the exact same idea that you have, and there's probably 1,000 other founders also having like the same idea, like the reason you're going to win is because you're going to out execute them. And so that all comes down to like, that the founders, and like the grit of the founders, and like what their experience is, and like what is it, so they have some personal connection to that problem, where it's like they are driven to want to like start this company right now. Not just the reason is not, well, AI is super hot right now, I just want to cash in. Like, that's not, like, those are not going to be the successful founders. The ones that are going to be successful, who have some connection to the problem, they're really driven to, they're compelled to do it. Like, even if there weren't a big AI hype cycle bubble right now, they would still start this company. Those are the type of founders that I think are most likely to be successful.
How are you coping, Holly, with all this?
Yeah, I mean, well, I think it kind of comes down to a lot. It's like, building real companies versus, are you just building a cool technology or a feature, right? And I think, I don't think it even just applies to AI. Like, look at cyber, for example. We've been inundated with so many solutions that are really just features. Customers don't want to consume features. They want to flip a switch with their network infrastructure provider and have it be done, right? And it's kind of the same for AI. Like, John was just saying, there's endless startups that we see. There's tons of sales co-pilots and writing assistants and marketing tools, are kind of like insert solution here that's just like a thin wrapper around Chat GPT. So unless there's, other network effects or proprietary data moats that make that business model possible, there's really no sustainable competitive advantage to that. So similar to John, like I kind of look at AI as a supercharger or an augmenter to a business model. And if you stripped out the AI, have still a really strong conviction around the model, the team, the opportunity, because that means they're really solving a true customer pain point. And that's kind of the real litmus test for us.
Everyone, I can go all day, obviously, with Holly and John. This is super fascinating stuff, but we're doing this for you. So if you have questions for us, or if you've sort of joined late, there's a Q&A button at the bottom of your screen. There's a Q&A button. Put your questions in there, upvote them. I really want to get to your questions, but I've got a ton of questions, obviously, following up of this. I do see there's one question here from G on the replay. Yes, we're gonna distribute the replay for everybody at some point. So put your questions into the Q&A, and I'm more than happy to go ahead and field them over to Holly and John. Piggybacking on this, Holly, do you think that your approach has sort of changed, at least in the last year, as things have really accelerated as far as like diligence and things like this. You know, valuations obviously have gone up pretty fast. Like, has your sort of approach to diligence changed in the last year?
Um, yeah, I'll save the valuation piece. That's probably a whole separate topic, right? Yeah, I mean, I think a bit. I mean, I've kind of never really been one to shorten up or skip on diligence for FOMO, and I think we see that a lot. We saw that a lot in 2020 and 2021, and I think we're seeing it a lot now too. But you know, kind of as a fiduciary of LP's capital, that's not something that I'm super into. So, you know, we might ultimately be wrong, but it won't be because we didn't do the work. I think, you know, in terms of what's changed, a much stronger emphasis on kind of data security being embedded in some of these AI solutions, data supply chain and governance, you know, or governance, like where'd the data come from? Should you have it? Are you doing something ethical with it? And then I think that this probably goes back to John's point, and it's something we've, you know, always looked for, but are really reinforcing it. But, you know, say I'm, you know, looking at a company that's using machine learning to reinvent how we design and procure commercial furniture packages. You know, that founder really has to have been in that industry for a long time. They have to know the players, know that there's one incumbent software solution from the 90s that's still in use, you know exactly what these pain points are for the customer. And so what kind of value that they need to build into the product to actually like mitigate that inevitable inertia around switching. Um, you know, if that founder built a really cool vertical SaaS solution for convenience stores before and then switches into commercial furniture for Act Two, that's great, but it's not for us. I mean, because they're not going to change those purchasing behaviors in these types of legacy industries. So that is kind of like that real founder market fit, and I think that's really, really crucial for us.
Do you have any, has anything changed for you, John? I mean, obviously you're super early with a lot of these accelerator startups ideas and stuff. Has anything sort of changed for you in the last year on this?
Um, yeah, I mean, the space has only gotten hotter. I think it's, I mean, that really is, I mean, I just reflected on this that like, you know, every single day there's hundreds of new founders who kind of show up like whatever bright-eyed, bushy-tailed and like, you know, in, you know, landed SFO like with the dreams of like of doing a start like an AI startup. I heard a stat that 80% of the you know the companies in AI that are being funded are here in the Bay Area, and you know that this kind of just raises the question about like, well, who are these other 20%? Because there's so much stuff that's going on, you know, here physically in the Bay Area. And I think that what another thing, a trend I've seen, even started companies that start on other places, it's like, well, when you get serious, like when you raise your Series A or, you know, that sort of thing, you should really relocate to the Bay Area. There is like things are, I mean, it is hotter than they've ever been. There is, you know, on any given day, there's 5 to 8 events that are happening just around generative AI, like around the Bay Area, many of them in kind of San Francisco. And there's like a place they've renamed, you know, Hayes Valley, they renamed as Cerebral Valley, but then also in other locations in Hillsborough, in Palo Alto, in a number of different areas. So like things are as hot as they've ever been. There's like, it's so interesting to work in this space now because they're like, you look at the, you know, if you look, you know, just a few years ago, and if you measured like how much of, you know, the global IT spending is happening on kind of machine learning. And, you know, it's probably doesn't even register in the pie chart, right? It's just, it's a tiny amount. Now it's a huge amount. I mean, there's a, like, and this, we're not talking about only just startups, we're talking about big companies, everyone. Now there's like, there's now a chief AI officer. There's like, you know, this is, not only is this, you know, there's a lot of hype around it, but there's real huge amounts of capital that are behind this. And they are, and companies are investing heavily in this because if it's like, it's, you know, they see like if you're then embracing AI or like you're being left behind. And so you know, I think that as well, like there's, it's not only, it's all not only in the startup landscape, it's also kind of at larger companies as well. Everybody is talking about is talking about AI, using AI, and because there's real capital behind it, there's going to be real accountability as well. I think this is probably maybe some of the, you know, we talk about a correction that's going to happen at some point when, you know, they say, hey, okay, we spent, you know, X hundreds of millions of dollars on this project. Where are the results? And there's a big difference between building a demo and that uses AI and building a real commercial product that you can deploy and use and works in real life. There's a massive gap there. And I think that there's a lot of companies that are starting to realize that at this point. And so I think that this is going to be, we're up for some kind of like interesting times, coming up. Absolutely. But again, this is like, I mean, it's we are so privileged to be basically to be working in this space while this like revolution is happening. I mean, the closest parallel to this is like during the late 90s, like during the kind of that first web craze that was happening there. But I think this is actually bigger than that, and like we'll have be longer lasting than what we saw in the 90s.
I see lots of questions coming in a Q&A. Everyone, keep adding questions. I do, Holly, you sort of opened this up. So, you mentioned valuations, right? Okay. Obviously, kind of, you also, John, you talked about potentially bubble being a bubble or whatever. Okay. How is that sort of affecting you? What are your thoughts on valuations right now in this AI space? I mean, Holly, maybe you can start on this one, and then we can go to John.
Yeah. Yeah, what is it they say? The test of intelligence is the ability to hold two opposing ideas at the same time and still be able to function. I mean, I feel like that's kind of where we are. There was, we had median early stage AI valuations at like 70 million bucks last quarter. And then at the same time, you had flat and down rounds accounting for like 1 in 4 deals. So that's the highest we've seen in a decade. So yeah, I mean, there's definitely a tremendous amount of inflation in AI valuations, and there's definitely a bubble in some capacity. It's coming. But like, on the flip side, we're still in the early innings. It's a huge, $15 trillion opportunity. So I also think it kind of depends where along the stack you're investing, at the infrastructure and model level. It's incredibly capital intensive. There's going to only be certain funds or companies that have the capital and compute power to even play in that space. So maybe like those types of valuations do hold over time. But I think both things are true.
Yeah, and I mean the truth is, I mean, yes, like I mean, we've had some kind of just eye dropping, I mean, just like jaw dropping, like uh, valuations of some of these companies, even ones that are like they're not only pre-revenue, they're pre-product. I mean, some would be, here's my investment memo, and look at, let's raise, based on just on like the fact that some of the team were from OpenAI or Google Brain or like these sorts of things. There is like, yeah, and some of this is like irrational exuberance, and we've start to see some corrections there. My view on this is that founders who end up kind of going in that direction, it is like the valuation of this early stage is a vanity metric, and it's not, and like you can raise a lot of money, but you're actually screwing yourselves for the next round, because trying to get enough revenue to grow into that valuation becomes a real tall order, and you can even end up sinking the company. And so this is like, and I've seen this time and time again where it's like, like they release some really cool demo on Twitter, on X, right? And then they get some traction, they get some interest in there, and then investors get interested. And it's mostly smoke and mirrors, but they cherry pick some good example or something, but it captures people's imagination. There's a feeding frenzy, and then they end up raising a large amount of money at like a sky high valuation, right? Then they get in the work of like, okay, well, now we have to actually build this. And it turns out like building it for real is a lot harder than building that demo that they had, that they just posted, right? And yeah, and then that basically they're dooming their company at that point. And whereas if they would have actually been a little bit more realistic and modest around kind of what they were trying to do. I mean, it's always great to have a great long-term vision, but also be like realistic about like, here's the milestones we're going to hit and all this, because a lot of things, I mean, you want people, like if you're going to allocate capital to a company, you want people who are going to have high integrity, who are going to do what they say they're going to do. right? And you want people who are going to be, and these are the ones that you want, that you feel like, okay, look, they said they're going to do this and they did it, right? And if they just keep doing that over and over again, then pretty soon it's, then you see that they're going to have a path to that sort of success. Yeah, and so I think that yes, there are some sky high valuations in there. There also are some that I think that are quite reasonable, and like they're reasonable for the stage that they're at. And I think that often this comes from I see this often with even experienced founders, where just like if they've had success in the past, they've been burned in the past by making some mistakes in terms of choosing who's on their cap table, who's their investors are, or being kind of railroaded into a particular type of road. They've seen that, and and they don't necessarily want to do that for the future. Then some of these are ones where I see, like, at the early stage, they're actually having more reasonable valuations.
Alexander is kind of asking a question that's very related sort of to all the stuff we just talked about. And she says, hey, what are some of the biggest challenges and risks that you see for sort of AI startups moving forward? And maybe, Holly, we can start with you on this one. If they're founders starting companies right now, what are some of the biggest risks that you see?
Yeah, I mean, I think a lot of it kind of comes back to, making sure that you have a real business model and kind of some kind of defensible moat, right? I think there's too many companies that are just really trying to build cool technology solutions without really understanding if they're solving a real pain point, right? And so I think that's where most folks get into trouble. I mean, I think from a technical perspective, there's some really great talent out there, and there's some really amazing founders that are building really cool companies. But it's just making sure that you are actually solving a true real pain point for that customer, and you know how to kind of execute on that vision and that plan. Because otherwise, you'll get that technology built, and it's not going to go very far.
Yeah, I don't know, John, do you have any thoughts on this as well?
Yeah, I mean, I've seen a ton of these companies that they're really just features in somebody else's product or platform. I mean, so just yesterday there was a new announcement by OpenAI. They're saying GPT 4.0, and there are a lot of startups that I know that I've talked to that, like, they're dead now. I mean, they're not, like, they don't really have they need to pivot. They need to change what they're doing. Same thing happened the last OpenAI Dev Day, right? And this is, I mean, I think that there was at some point there was some belief that, hey, like, OpenAI is just going to make this platform, they're not going to go and like compete in all these different areas. Like, no, I've been pretty clear from their what they've been doing. They're happy to just go and railroad over any set of startups that are kind of building things in this space, especially if it's not differentiated. They have they're it's just a feature in the platform. Their approach is like, we're just going to build this into the platform. And there's a lot of these kind of thin wrapper type of companies. I mean, if your differentiation there is that, well, we use GPT-4, whatever, some recent model, and we have a clever prompt on top of it. You're not going to be, you're not going to be successful there. And the truth is that is the majority of the startups that you see out there are really little more than that. And I think this is why, I mean, just looking at this, a lot of these startups actually got funded, and got funded by kind of well-known VCs there. And I think that, I mean, the reality of it was that for a long time, even people in VC, they didn't really know and understand generative AI, and and they saw something that was seemingly amazing. But they little do they know that, like, just behind the scenes, I was just like, because the underlying foundation model is amazing. And so this is like, they're just putting a nice, lipstick on it and a bow. And then it's like, here's a, look at these amazing things. Or look at our amazing technology. It's like, yeah, it's just a prompt. Sorry. But a lot of them they didn't understand that. They didn't know how to do diligence on these deals or anything. And so they ended up funding these type of companies. I think, like, now they're starting to get a lot more wise about this. They, talk about what is, hey, like, is there a data moat? Like, is there something kind of that unique that they have that, are not going to just end up being railroaded by OpenAI or Anthropic or Mistral or Microsoft or Google or, any of the other big guys who are kind of playing in this game. And then that's the biggest risk that I've seen, for these early stage companies. And like, I mean, if you look at like even a, batch of Y Combinator, right? It's just like so many of those companies, they pivoted hard into AI and Gen AI. So many of those companies are going to need to change what they do because of what, of like the shifting landscape that has happened.
Yeah, it's and Mike, I think we got covered Mike literally asked about this as well. It's like, what, anything interesting that came out of OpenAI that was going to crush a bunch of startups? Well, a lot, unfortunately, Vince is asking, if you had to make a decision on a company with a good founder market fit versus a good founder technology / AI fit, what would you prioritize? Anyone want to take that?
Is that one
Holly?
for me? Yeah, I mean, I think for me, I'd go founder market fit all day, especially just where my interest kind of is in the intersection of AI software and legacy industries. If you're not coming from a background there, it is super hard to change like purchasing behavior in some of these industries. And if you don't have that right insight, it's never going to happen. I think you can augment the team with some really great technical talent, plug in some gaps where you need it with go-to-market, marketing, whatever. I think the founder market fit, just for the areas that I'm interested in, is way more important overall.
Like definitely founder market fit. That being said, if you're trying to build like an AI company, you need to have somebody on the team who understands that. Like, just, I mean, if you're trying to hire that out externally, like the comp for like people who understand AI now has gone like so completely off the charts. It's like, it's insane. And so thinking that like, hey, like we want to build this AI company and we don't have like a founder, we don't have anybody on the team who has ever built with AI, knows anything about AI, but like, hey, we think it's a cool technology. Like that's, you're fooling yourself. You need to have somebody like that's on the team who has some experience with it. And
Ideally both.
yeah, ideally both. Yeah. Of course, ideally both. But I do think that like, if you don't have if on the flip side, I think that even worse startups are ones where it's like, hey, we're a team from technologists from Silicon Valley, and we're here to solve your problem in construction or whatever, like whatever other area. It's like, those are very unlikely to be successful. Occasionally you get kind of like they do win, but those, like, unless you really understand the industry you're getting into and the problems you're trying to solve, like, and it goes back to the earlier point, is like there's 1,000 other founders that are trying to do the same thing, right? And like usually the differentiation there is that, no, I actually understand the problem. This isn't like theoretically AI would be able to help lawyers do their work. It's like, no, it's like we, like I was a lawyer, or like we have lawyers on our team, or like there's like people who understand that at a deeper level, who've sold into those industries before, who understand the dynamics there. Those are going to be the ones who are going to win versus the ones that are just, coming, because there are 100 other teams that also have no background in those industries, but just are trying to use AI as that hammer, and then, and are looking for nails and for opportunities in those spaces.
Grace has a question, and the way I sort of read it, it's directed at both of you, but how this is kind of all you, Holly, because basically she's asking, hey, obviously generative AI is very impactful, but how can safety, security, and privacy be improved, especially in, I mean, she's mentioning healthcare, but obviously legacies in industries in general, right? This is going to become a major issue and things like that. Any thoughts on this, and how, is there any views on sort of regulation on AI and things like that, Holly?
Yeah, I mean, I think they've just put through a bill in the House around a lot of data governance that has some bipartisan support. I mean, there needs to be a decent amount of regulation here, and it needs to be done the right way. You can't have a repeat of kind of what we've seen with some of the tech and social media stuff play out. There's definitely, ethical considerations around, how you got the data, what you're doing with it, doing things the right way, doing it in an ethical way. So I think building kind of, an ethical AI framework into whatever business you're building is super important. Making sure that you have the right cybersecurity built within those tools is super important too. Because, this is where things can kind of get out of control. And then you might have some, companies operating on the ethical side of the spectrum and some not. And I think, if without a legislative framework here, it's going to be tough to kind of make sure that this all heads in the right direction.
And is that something you sort of look for within diligence? And what are some of the things you do look for if that is something you're looking for?
Yeah, for sure. I mean, I think a couple of the different, even just as an angel investor, things that I've looked at, a lot of the founders will explicitly say that, they might have a little section on what they're doing in cyber. They're gonna have a section on, that they, there's kind of like, AI code of ethics and things like that. And, we take that stuff super, that's super important to us. So I think, as you're going through that diligence, I tend to also just look for whatever this company is building, what kind of externalities are associated with it, right? And so that can be positive or negative. And so if there's things that might come out of it because of the way that they're using data or things like that, that's probably not a space that I want to be in.
I know you're pretty passionate about this too, John. So I'd love to get your thoughts on this.
Oh no, absolutely. I mean, I think this is super important, and I think that so far it's been really the wild, wild west. I mean, you have the like uses of data. I mean, also in usage for using data for things that were not necessarily kind of, I guess, kind of aligned with society's best interests and things like that. I do, but and I do agree that that these things are very important. There will be kind of a demand for this. That being said, there is on the regulation side, there is so much capital, so much opportunity and around this that I do think I think it's unlikely that there's going to be some real substantial regulation that is going to hold back kind of innovation like in a real meaningful way, just because there was so much demand, so much money, and everything. There will be, Congress will get like force of passing. Actually, before that, there'll be some state laws. There's things that are already started. There's gonna be a patchwork thing of states. There's going to be, then in Congress they're going to pass something. Now, is that going to be something? My prediction there is that yes, they will pass something, but it's not going to have just be a major barrier to innovation there, because of just the economics of the amount of money and resources that are going into this, and the whole AI wave. And so yeah, I think that so it's a lot of these things are going to actually come down to more of instead of being legislated, there's going to be certain standards that ethical companies are going to abide by, and then that's what consumers and those who are customers of those companies are going to be looking at when they are considering these type of things, versus like a kind of Washington Congress top down approach. I think that's,
yeah. But by the time those legislative things go through, they're so watered down, and I saw this a lot within the quantum security space, right? By the time something gets passed, it's like you're looking for some sort of carrot or some sort of stick, and if there's neither, then not much happens, right? So
Patrick is asking sort of like on your perspective on this. I mean, John, you sort of mentioned that like some companies, right, that just because of the large language model, all this stuff, they're going to need lots of money, right? Their data centers and all these things. Do you think there's a consolidation happening or gonna happen, at least in VC, just because of the sheer capital? And if so, how do you think other funds can become competitive in the space? And this is for both of you, whoever wants to take it.
yeah, there's going to be a lot of consolidation. This is inevitable, especially, you look at the kind of the talent, kind of lack of talent, like how talent is such a premium. And honestly, there's a lot of talented people who are kind of locked up in organizations that are not, they shouldn't be in those organizations, honestly, because they don't really have a future. So it's actually better for everyone that some of this consolidation does end up happening. Yeah, there's gonna be a ton of these things, even at the big guys, where it's gonna be like if they're not able to compete and outspend some of the others, like they're gonna fall by the wayside and they're just not, and yeah, so it's just kind of like you don't for if you're playing some of these games, you want to make sure you're not going to be undercapitalizing them, right? Because there's a real danger of that. If you undercapitalize, then like they'll end up losing, right? And so you need to make sure that like for the companies that you're backing, and that they have a path towards, okay, what's the type of capital they're going to need for this, and do they have like a path to getting that type of capital?
It's at least from my vantage point, Patrick, there's definitely there's a set of very large VCs that are raising more and more money, and recent Horowitz, that kind of stuff. So that they're kind of dealing with the late stages, and they're almost like at the intersection of like sort of like PE and VC in a way. And then there's this just like proliferation of new and emerging managers like like Holly and John, that are coming at this in a very different way and are sort of like helping a lot of these companies start. And the key is sort of, can those companies get to that sort of next step? Can they get to that next sort of round of financing and things like that? And that's the tricky part.
Yeah,
Yeah.
yeah. I'm sorry. I think I misinterpreted the question around the company side, but certainly on the VC. I mean, personally, I believe that there's a big disruption going to happen in this industry as well. There's a lot of VCs that their jobs are going to become obsolete by generative AI, to be honest, because they're not actually providing a huge amount of value there. I mean, like when you're talking about like, hey, we're doing these analytical models, especially things like that are based on, as things that are late stage, in private equity, et cetera. I mean, I do think that like that is an area that like will likely get disrupted. And yeah, and there are, I think that they're the ones that are kind of, on the VC side fully embracing AI. Those as well, I think, are going to end up being, the winners in the VC space. About, not only and there's a lot of benefits that you can get from utilizing some of these generative AI tools, in the job of like a VC as well. And so I do think that like there's going to be disruption in this space. There's some of these kind of older, more established firms, like the ship turns incredibly slowly, like at that level, because like when you're talking about those LPs would be like, well, hey, I know that we backed you at the last 10-year fund, and like we're going to back you again on this next 10-year fund, even though you're not that innovative. The things move very slowly at that rate. But if you look at the ones who are going to be like outperforming and doing the best, and like doing the best deals and getting the best alpha, the best returns, those are going to be the ones that are the funds that are like more fully embracing, AI at this point.
There's a question here on like the funding gap for startups from Hugo, and they're mentioning that at least where they're at, which is sort of like in the Middle East, it's the gap between pre-seed and seed, and then anything after that is pretty significant. It's even in AI, just because of the sort of the funding ecosystem. And they're simply asking, do you see something like this in sort of your ecosystem? And, I don't know, maybe we can start with you, Holly, on this. Are you sort of seeing some of this as well? And then obviously I'd love to go to you as well, John.
Yeah, I mean, I think it's across the board, and it is even for AI companies. I mean, I think I don't remember the exact stats off the top of my head, but I mean, before you were going from pre-seed, seed to Series A to a B, like all within a couple of years, right? And the metrics and things, the targets that you had to hit were a lot different. So there's this huge gap right now, where kind of things aren't coming off the conveyor belt at the later stage, right? So there's things have slowed down. So, to get to, from a seed stage round to an A, it's taking, a year, 2, 3 years longer. And so you've got to do a lot more with less. And so I think that's across the board. I mean, I don't have a super amount of expertise in the Middle Eastern markets, but I mean, we're definitely seeing that over here.
What about you, John? Are you seeing this? I know you're obviously based in Silicon Valley. Are you seeing this or not as
Yeah,
much?
definitely. I mean, I think there is, I mean, there. there's a delay here though, that like, I mean, what has happened like in general is like some of the later stage, capital is now being shifted more towards early stage. So it is pretty easy to raise money kind of early. Now that being said, like you need to kind of show some real traction to get, because the metrics for doing a Series A, for example, are, are tighter, tighter than they've been in the past. And so yeah, and so what that really means is that, like Holly was mentioning, when you're budgeting, you're planning this out, like you have to, it used to be that like, hey, 18 months later, we could do our, we could do our Series A, or that sort of thing. You need a budget for, 24 months or more at this point, because like the metrics are quite a bit higher. And so that there is, yeah, and that being said, I think there's a lot of capital that wants to come into these spaces, and it's hard to do this at the very early stage. I mean, it just doesn't make a lot of sense. And like you can't, I mean, that's just how you end up with kind of sky high valuations and like, $100 million seed rounds and things like that, right? This is but if you do have a really exciting story and a promising company, then there absolutely is capital for you. But like if you're not in that space where it's like we haven't quite yet turned the corner, we haven't yet, we don't have like kind of strong revenue and traction at that point, then it gets really hard for companies that kind of at that, post seed stage, but are trying to raise their next upcoming rounds. Because I mean, the capital allocators have gotten more picky, like rightfully so. I mean, if you look at 2020, 2021, like some of these like times of irrational exuberance, and and then the fact that it's kind of like when the not many companies IPOing, not many kind of late stage exits, and that ends up just kind of trickling down, like down to the market from okay, well now your late stage startups, there's not that many exits, well that trickles down to Series C to Series B, and then and ultimately Series A. What I've seen is like the seed and pre-seed has been pretty like insulated from that. If you look at all the stats around this, these are actually up, like the funding amounts and everything are actually up in those categories. But certainly the late stage stuff has taken a huge hit there in terms of the capital allocation.
We have, obviously, as a lot of new and emerging managers in the community, quite a lot on this call. There's probably going to be probably double or triple the amount they're going to watch this recording. I'd love to sort of end by, if you can sort of give a couple pieces of advice to folks that are starting out or thinking about getting into this and starting a venture firm. What would you say are some of the key like pieces of advice, or any sort of words of wisdom there? I would really appreciate it. And I don't know, maybe Holly, you can do this, and then we can end with you, John.
Yeah. Well, as John said before, I think the deadlines, and that's why the VC Lab program is so amazing when you're trying to get something off the ground. I think for me, and it's probably like both in starting a venture and life, it's to kind of, don't let the, perfect be the enemy of good. It's hard to throw things out into the world before it's, perfect or ready. I still struggle with that. So, if you have the skill set, the drive, some resilience, and you want to go out and build something, trust your gut and kind of make that leap. And I think, earlier on in my career, and I would have definitely placed way more of an emphasis on kind of mental health and making sure that I understood it. Which is something that, at Apprentice, we're going to, really try to make sure that we're supporting the mental health of founders and across the firm. So those are a couple things.
Amazing. Thank you so much, John.
Yeah, I mean, I think I remember in the program, again, Mike and Adeo kind of mentioning around like, this is like, raising a fund is like going to be one of the hardest things that you ever do. I mean, not to kind of overemphasize it, but it is a lot of work. It's like, and just to kind of realize that it's a lot of work. It's a lot of talking to people, and it's not like, in a lot of kind of talking to LPs and developing those type of relationships. I mean, lucky for me, I'm very I'm very enthusiastic about these things, and I'm happy to talk to people all day around these. But like, it will take a lot of time. It'll take a lot of time. It's a real commitment. You will need to take, you'll need to do probably way more meetings than you thought you would, even if you feel like hey, we felt like we have a pretty good story still. You know, it's, you know, there were some hard times where it's like there's 3-4 weeks time period where it's like we didn't get any commitments at all, right? And it's like, okay, I mean, you got to keep working, and you got to keep, keep slogging through it. And I guess the other thing, I mean, just my perspective there is that it's not a matter of like where, hey, we're just going to raise a fund and then like, hey, we're smooth sailing after that, because guess what? As soon as you're going to do the fund, you got to do then the next fund and the next fund. So this is like kind of my impression now. I mean, just now being into this is that this is now the norm. I mean, like it doesn't end, it doesn't stop. Like and so like if you don't enjoy that process, if you not willing to put the work in, this the VC may not be for you, but if you do and you feel like you can do this, this is not a short-term commitment. This is a, minimum 10 years, more like a 15 to 20 type of year commitment. And so like, just realize like that's what you're embarking in. And I think this is where, I mean, programs like VC Lab are great, like we had an amazing experience with it as well. It provided that type of structure and deadlines that we needed to actually stop talking about doing a VC fund and actually going and doing the hard work to do it. And like the whole team has been fantastic, just interacting with everyone. So I highly recommend it.
Awesome. Thank you so much for the kind words. Holly, John, this was amazing. I learned a ton from you. I can see it in the chat. People are really excited about this. Thank you so much for doing this. Enjoy the rest of your day, and everyone will be sending out a recording in a little bit. Enjoy the rest of your day, everyone. Bye. Thank you.
Thank you, guys.